But from the broader markets, one of the stocks that stood out in trade and has performed really well over the last couple of hours is V-Guard, up over 4% as we speak on the back of very strong earnings for the fourth quarter. Revenue came in as much as 58% higher on a year-on-year basis. PAT doubled, and you saw EBITDA also doubling. All the segmental revenue was very strong for the quarter. Electronics gaining over 60%, electricals gaining about 58%, and consumer durable gaining about 55%. We're speaking to the management first on ET now. Sudarshan Kasturi, who's a Senior Vice President and Chief Financial Officer of V-Guard Industries, is joining us. Thank you so much, Mr. Kasturi, for taking the time. I want to start by asking you, this fourth quarter, you've had a very, very strong operational performance. But what is the kind of impact that you're seeing on account of the second wave in the first quarter of the current financial year on sales?
Yeah, so we've had a strong Q4, which also followed a strong Q3. So in the second half of FY21, we've seen the business come back pretty strongly. But then from mid-April onwards, there is a second wave that has hit the country, and it's a more severe second wave. As we speak now, most of the country is under lockdowns, so therefore consumer demand is significantly affected. I think even June is when some of the lockdowns will start getting lifted. I would expect that there is a significant amount of impact on demand during May and June. We'll have to watch for that. There's also a high probability of a third wave coming. The question is, what's going to be the timing and severity of that? So that is something we need to watch for.
Mr. Kasturi, good morning. This is Cheryl also joining in. This is the second year that the summer products have actually, summer product sales have been impacted. This is all on back of due to COVID-19 and the surge in the cases that we're seeing. So what are the current level of sales for these products?
See, as of now, last year around this time, we were in the same position. The full lockdown was in effect. Today, across the country, hardly about 10 or 15% of our channel partners are operational. So the May month is probably something like 30 or 35% of plan. So which is about the same as what last May was.
Mr. Kasturi, despite actually there being an increase in the raw material prices, the company has actually managed to report good set of margins. Are these margin levels sustainable going ahead?
Yes, I mean, there's been significant pressure due to input cost increases. We've tried to sort of keep in pace, and by and large, maybe with some lag, we've been able to catch up on pricing actions. When we look at the Q4 numbers, there is still a little bit of lag on pricing, so it had some impact. We see that gross margins have dropped slightly compared to that, but I think it is a question of maybe a couple of months, 2-3 months, we would be catching up on prices. But then the risk of further commodity escalation is going to be there, and that's a challenge which businesses have to face. And when it happens, we will try our best to pass on and pass on through pricing.
Mr. Kasturi, if you can lay out for us, what are the kind of price increases that you took in Q4? You say that there's a bit of a lag in the kind of increase in prices of commodities and the price increases that you've undertaken, but what have you taken in the fourth quarter, and what will be undertaken in the current quarter? Are we likely to see more price increases?
Yes, we have taken price hikes in stages. Depending on the category, anywhere between 6 to 12% price increases have been taken, not in one step, but in through the months of Q4. There are also some pricing actions which are happening in Q1. So it's been going in stages.
Now, some of these products are incredibly price sensitive. So are you going to be able to hike prices further without hurting demand?
Well, it's a competitive scenario, so it's not just one company or one person who can decide that. It is a function of what the input cost increases, the demand situation, the competitive scenario. We'll have to take all that into account. Yeah, definitely. When prices go up, there will be some impact on demand, but we've got to balance between volume and margins. So that's the balancing act we've got to do.
Your electric segment accounts for approximately 45% of the sales and also caters largely to the real estate market. We've been seeing that the real estate sector is actually seeing a rebound, but actually could you help us understand what sort of a recovery are you seeing in the real estate sector?
Yeah, the electrical segment has done well. We see activity picking up in real estate. So wires plus related accessories like modular switches and switchgear have done well for us. So it's been a strong performance from the electrical segment.
And while your consumers continue to sit at home, how is the demand for other home appliances?
Yes, our durable segment also have done well. To call out a few products, kitchen appliances have shown a good growth for us. Fans have also done well. Water heaters not so much because we've had some severe supply disruption issues. But I think with the exception of that, home appliances have done well.
Now, what is the excess inventory that's currently lying with you, Mr. Kasturi, and with the dealers?
Our dealer inventory is about at normative levels. So we have not sort of pushed more stock into the trade. At our warehouses, we are holding a little bit of additional inventory. Basically, learning out of last year's COVID experience is that we need to anticipate supply chain disruptions and have inventory with us when the demand comes up. So we have consciously built some additional inventory at our warehouses, looking at that time we were planning for a strong Q1. But now, given what's happening in May and June, we will then go back and fine tune our production plans, and we will produce as per need. At the moment, we have sufficient inventory.
All right. Thank you so much, Mr. Kasturi, for taking the time and for laying out the picture for us of how your business did in the fourth quarter and how it's likely to function in the current financial year, challenges notwithstanding. We're slipping into a short break, but on the other side, we'll take all of the viewer queries that are already piling up on social media, and that should be really interesting. Do stay tuned.